So till now we are done with revising three chapters from CA and Auditing. So number one, we are done with introduction to audit. In that, basically we have understood what is the meaning of the term audit, and we got to know about the meaning of the few fundamental terms which we are going to repeatedly use in the subject of audit, that we all got to know in the chapter introduction to audit. Number two, we have revised nature, objective and scope of audit, and along with that ethics of the auditor also we have covered. So it is also one of the important chapter from the examination perspective, and we had a lot of discussion. We have understood various concepts associated with the audit related things. So we revised the concept of nature, objective and scope of audit along with ethics. Then we have revised the most important chapter, audit reporting, which is actually a comprehensive chapter, which is actually a bigger chapter and important from the examination perspective. And in this chapter we have actually revised 4 standards. 700 we have revised, 701 we have revised, 705 we have revised, 706 also we have revised. Along with that, a few sections of the Companies Act also we have discussed. 143 subsection 12 we have discussed, 143 subsection 1, 143 subsection 3 and 143 subsection 11. The reporting requirements under all these sections we have understood. In addition to that, a few specific concepts also we have understood. We have understood the concept of branch audit, we have understood the concept of joint audit, we have understood the concept of internal audit. Along with that, SA 610 also we have covered. So till now, this is what actually we have revised. So now the next chapter which we are going to take up for revision is audit documentation and audit evidence. So now we are going to take up the revision of the chapter audit documentation and audit evidence. So from the title itself, you can identify this chapter is actually combination of two chapters. This chapter, audit documentation and evidence, is actually combination of two concepts actually. So one concept is audit documentation and the another concept is audit evidence. One concept is audit documentation and one concept is audit evidence. In fact, in the study material, if you find, you'll be able to find two different chapters, but actually we have done some chapter rearrangement here. Two chapters we have combined. Audit documentation complete chapter we have taken from the audit evidence. If you open the study material and see, audit material is a very big chapter. In that, whatever content relating to SA 500 is there. So I will come back to the standards later. So a part of audit evidence chapter from the study material and complete audit documentation chapter, both we have clubbed together and created this chapter, audit documentation and audit evidence. So like this, we are going to have a discussion regarding two different topics, but which are closely related with each other. One is relating to audit documentation and the other one is relating to audit evidence. And each of the concept is taken from specific standard. Audit documentation related discussion, whatever we are going to have in this chapter, that is actually taken from SA 230, whereas whatever discussion regarding audit evidence we are going to have in this chapter, that is actually taken from SA 500. So when I say I am revising the chapter audit documentation and audit evidence, we are actually trying to revise the content of two standards. One is SA 230 and SA 500. So this chapter has been completely taken from two standards, SA 230 and SA 500. That's what we are going to revise. See, we will talk about audit documentation later. First, we will try to begin our discussion with audit evidence. We will try to complete all the related discussion of the audit evidence. So once we are done with the discussion of audit evidence, then we will come back and try to understand the the discussion relating to audit documentation. So we are going to begin with now audit evidence. And when I say I'm going to revise this audit evidence, what in fact we are trying to revise? We are trying to revise the content from SA 500. So let us try to understand this. See, before I talk about this audit evidence, what is the meaning of audit evidence and all, first of all, let us try to understand, let us try to revise actually what is the overall process of the audit, what actually happens in the entire audit process. See, first of all, the first and basic thing which will happen in the entire audit process is auditor will get appointed. The first thing which auditor is going to do is the first thing which will happen in the entire audit process is auditor is going to get appointed. And we know what is the ultimate objective of the entire audit also. So what is the ultimate objective of the entire audit? The ultimate objective of the entire audit is auditor's opinion. The ultimate objective, the full and final outcome of the entire process of the audit is the auditor expressing an opinion. So the process of audit is going to commence with the auditor's appointment, and the final step, the ultimate outcome in the entire process of the audit is the expression of opinion by the auditor. Say you take any opinion, for example, if I am expressing your opinion on something, that opinion should be backed up by some information. That opinion should be supported by some information. Even in the audit also, if I'm an auditor and if I'm expressing an opinion, whatever opinion it could be unmodified opinion, it could be qualified, it could be adverse, it could be disclaimer. Any opinion should be backed up by some information. So that information in the audit terminology, we are going to call it as audit evidence. What we are going to call it? Audit evidence. If I put it in simple terms, audit evidence means nothing but the information which supports the auditor's opinion. Or alternatively, I can also say that the information which forms the basis for the auditor's opinion, that I am going to call it as audit evidence. That I am going to call it as what? Audit evidence. So the ultimate objective of the auditor is to express the opinion, but to express that opinion, auditor needs some supporting information which we are going to call it as audit evidence. So in simple terms, the information which forms the basis or which supports the auditor's opinion. And how the auditor will get this evidence, sir? See, just because you are appointed as an auditor, evidence will not automatically come and fall in your lap. So as an auditor, you need to put some efforts from your side in order to obtain that evidence, and that efforts which auditor is going to put in order to get that audit evidence, that we are going to call it as audit procedures. That we are going to call it as what? Audit procedures. So what overall happens in an entire audit process is, first auditor will get appointed, then he will perform something called audit procedures. Sir, what is the meaning of audit procedures? Audit procedures is actually a very broad term. It includes everything which auditor does in order to obtain the evidence, that we call it as audit procedures. So audit procedures is actually a very broad term. It includes everything which auditor does to obtain the audit evidence. So first auditor will get appointed, then he will perform audit procedures. From that performance of audit procedures, he will get something called audit evidence, and on the basis of that audit evidence, auditor is going to express the opinion. By expression of opinion, the process of audit is going to come to an end. So this is what the entire process of audit. See, we have actually addressed the last part, how to express the opinion, what kind of opinions are there, so how to express that opinion in the form of an audit report. That everything we have covered in the audit reporting chapter. Now our focus will be on these two important steps. This chapter is going to be on the focus of this chapter is going to be on two important steps, that is this audit procedures and audit evidence. So as I have told, first we are going to begin our discussion with audit evidence. But before we can understand the meaning of audit evidence in a detailed manner, first let us try to understand about this audit procedures. So to get a better understanding of audit evidence, we need to have first a better understanding of audit procedures. So let us try to understand audit procedures and also try to elaborate what are the different types of audit procedures that we will try to understand. Okay, so what are different kinds of audit procedures? First of all, meaning of audit procedure, as I have told, any procedure which is performed by the auditor to obtain audit evidence, that we call it as audit procedures. And the term audit procedures is a very broad term. It includes everything whatever auditor is doing to obtain the audit evidence. And these audit procedures are broadly divided into two categories. How many categories, guys? Two categories. Audit procedures are broadly divided into two categories. Number one is risk assessment procedures, and number two is further audit procedures. So audit procedures are going to get divided into two categories. One is risk assessment procedure and the other one is further audit procedure. And this further audit procedure is further divided into two categories. One is compliance procedure and the other one is substantive audit procedure. So broadly two categories, but when I talk in the specific terms, audit procedures are divided into three specific categories: risk assessment procedures, compliance procedures, and substantive audit procedures. So let us try to understand what is the meaning of this term risk assessment procedure, what is the meaning of this term compliance procedures, and what actually happens in the substantive audit procedures. First, I will try to begin my discussion with risk assessment procedures. Guys, take a typical scenario. You have been appointed as auditor of some company. One fine day, you have to go and start doing the audit of that entity. So when you go and start doing the audit of the entity, do you think you will directly go to the accounts department and start verifying books of accounts? No. So first thing, when we as an auditor, we have to start the audit of one particular client, the first procedure which we do is risk assessment procedure. Sir, what actually happens in the risk assessment procedures? So it has been defined that risk assessment procedures are those procedures which are performed to obtain understanding of three things. Risk assessment procedures are performed to obtain understanding of three things. Which three things, sir? Number one, to obtain an understanding of entity, to obtain an understanding of the environment in which your client is operating, and also to obtain an understanding of the internal controls which your client is having. So first thing what we do when we start doing the audit, the first thing we'll try to perform procedures to obtain understanding of what? To obtain understanding of three things: entity, environment, and its internal control. Sir, why do we need to obtain understanding of entity, environment, and its internal control? For the purpose of identifying, to find out and assess, analyze risk of material misstatement. To identify and assess, that is to find out and analyze something called risk of material misstatement. And those procedures we have given a name called risk assessment procedures. So whatever I have told you now, that is actually the meaning of the term risk assessment procedures. So if they ask you what is the meaning of risk assessment procedures, it involves understanding. Those are the procedures performed to obtain understanding of three things. What are they? To obtain an understanding of entity, to obtain an understanding of client's environment, to obtain an understanding of internal controls. For what purpose? To identify and assess the risk of material misstatement. That procedures we are going to call it as risk assessment procedures. The name itself says assessment of risk. These procedures you are performing to analyze the risk. So that we are going to call it as risk assessment procedure. So that is what the first thing we will do. Okay, so we understood entity, environment and its internal control. We understood where the risk is higher, where the risk is lower. That all we will do. With that, risk assessment procedure will get completed. Then what we will do? So after performing risk assessment procedures, the standards on audit says you need to perform something called compliance procedures. Sir, what is the meaning of compliance procedures? The meaning of compliance procedures is those procedures which are performed to obtain audit evidence regarding operating effectiveness of internal controls. Regarding what? Operating effectiveness of internal controls. There is other name for compliance procedures. We also call it as test of details. Test of controls. So there is other name for compliance procedures. We are going to call it as what? Test of controls. The name itself says here you are going to verify the internal controls. See, in the risk assessment procedures, we will just identify, we'll just get to know what controls are there in the client's organization. In the compliance procedures, what we actually try to do is we try to perform audit procedures. We try to obtain audit evidence whether the internal controls, whatever I have understood in the risk assessment procedures, whether they are operating effectively or there are some weaknesses in the internal controls. So those procedures which I am performing to obtain audit evidence regarding operating effectiveness of internal controls, that I am going to call it as compliance procedures. The other name for this compliance procedures is test of controls. Other name for this compliance procedures is what? Test of controls. The name itself says whether controls are working effectively or not. Okay, so first I have done risk assessment procedures in which I have understood the entity, identified the risk. Then I have performed compliance procedures in which I understood whether the internal controls are operating effectively or not. Now what you will do? So now what we will do is we will try to actually go and verify the books of accounts. So we try to verify whether financial information is accurate and not misleading. That is whether the information in the books of accounts, whether the information in the financial statements, whether it is correct or not, whether the profit is correctly calculated or not, whether purchases figure is correct or not, whether the assets are correct or not. So this actual verification of the books of accounts and financial statements we will do at this stage. And those procedures I am going to call it as substantive audit procedures. So what is the meaning of substantive audit procedures? It involves actual verification of books of accounts and financial statements, whether information in the financial statements and books of accounts is accurate, not misleading, whether it is reliable or not. So checking that information in the books of accounts, actual verification of the financial information, that procedures we are going to call it as substantive audit procedures. And whether the information in the books of accounts, whether the financial information is correct, accurate and reliable or not, that substantive audit procedures, we can do it by using two approaches. For that, we can either follow test of details or we can alternatively follow analytical procedures. So substantive analytical procedures can be done in two ways. So whether financial information is correct or not, that we can get it done in two ways. One is by doing something called test of details. Other one is by doing something called analytical procedures. Sir, what will happen in the test of details? See, if I ask you one simple question, if you want to know whether the financial information is correct or not, whether entries in the books of accounts is correct or not, what you will simply do? We will simply verify the supporting documents. So that verification of supporting documents only, I call it as test of details. So to know whether financial information is correct or not, we try to verify the supporting documents, that we call it as test of details. And this test of details will be of further two categories. One is a test of transactions and the other one is test of balances. Nothing but if you try to verify the supporting documents of incomes and expenses, that we call it as test of transactions. If you are trying to verify the supporting documents of assets and liabilities, that we are going to call it as test of balances. Able to understand, everybody? So substantive audit procedures can be done in two ways. One is test of details, other one is analytical procedures. Test of details means verification of supporting documents. That is further divided into two categories: test of transactions, test of balances. Test of transactions means verification of supporting documents of incomes and expenses. Test of balances means verification of supporting documents of assets and liabilities. See, there is one more way by which we can verify whether the financial information is correct or not, which approach we call it as analytical procedures. See, in the analytical procedures, what we do is we will not check the supporting documents. To know whether financial information is correct or not, we will not check supporting documents. Why? Because if we check the supporting documents, for that we have already given a name called test of details. So to check whether the financial information is correct or not, instead of verifying supporting documents, we do one more thing. What is that one more thing? Is we try to study the relationship between financial and non-financial information. What we try to do, we try to study the relationship between financial and non-financial information. By studying that relationship, we try to evaluate whether the financial information is correct or not. So that procedure I am going to call it as analytical procedure. So for the time being now, you just remember what is the definition of analytical procedures. We have a dedicated chapter and a standard talking about analytical procedures. There we will get to know about this analytical procedures in a much more detailed manner. For the time being now, just remember the definition of analytical procedures. What is the meaning of analytical procedures? Evaluation of financial information through understanding the plausible, the acceptable relationship between financial and non-financial information. That procedures I'm going to call it as analytical procedures. So this is what the complete audit procedures are. Once again, if I do one quick recap, broadly two categories: risk assessment procedure, substantive audit procedure. Substantive audit procedure further divided into two categories: compliance procedures. Further audit procedures further divided into two categories: compliance procedures, substantive audit procedures. Substantive audit procedures can be done in two ways. One is test of details, other one is analytical procedures. Test of details is further divided into two categories: test of transactions and test of balances. Clear? Now there is one more thing which I would like to bring to your notice. See, between compliance procedures and substantive audit procedures, there is one relationship. So the thing is, one is performed to determine the nature, timing and extent of other. So let me not beat around the bush. Let me directly come to the point. The standards say that practically we perform compliance procedures to determine the nature, timing and extent of the substantive audit procedures. So what kind of substantive audit procedures we have to perform, how much time we have to perform substantive audit procedures, what depth of substantive audit procedures we have to perform, that will be decided on the basis of compliance procedures. If I give you an example, see, basically we perform compliance procedures to know whether internal controls are effective or not. For example, we performed compliance procedures and we came to know that internal controls are effective. Internal controls are all operating effectively. See, I told actual verification, we will not do 100% verification, we will try to do sampling. If we came to know internal controls are effective, they are not having any weaknesses, internal controls are working very effectively in the organization, will we try to perform more substantive audit procedures or less substantive audit procedures? See, if the controls are very effective, we will try to perform less substantive audit procedures. We become comfortable with verifying lesser number of entries. On the other hand, if you perform compliance procedures and you decided that internal controls are not effective in the client's organization, internal controls are not working effectively, then what we will do? There we will try to perform more substantive audit procedures. So if you pay the close attention here, we are determining how much amount, how much extent of substantive audit procedures we have to perform, that we are determining on the basis of outcome of the compliance procedures. So this is very important from the examination perspective. They might ask it in the true or false statements, etc. So one thing we have to remember, we are performing compliance procedures and on the basis of that compliance procedures, we are going to determine the nature, timing and extent of the substantive audit procedures. Clear, everybody? So these are all the different kinds of audit procedures. Everybody comfortable till here? So we understood what is the meaning of audit procedures and what are the various types of audit procedures we have understood. Everybody comfortable till here? So by performing this audit procedures, what we are going to get? So by performing this audit procedures, we are going to get something called audit evidence. So what is the meaning of the term audit evidence? As I've already told you, information that supports the auditor's opinion. This is simple way, but if you have to get the marks, you have to write the technical definition. So they say that audit evidence means the information which forms the basis for auditor's opinion. See, this word you have to use, the information which forms the basis for auditor's opinion. That information we are going to call it as audit evidence. Okay, so now let us talk about this audit evidence in a detailed manner. We'll talk about this audit evidence in a detailed manner. So where do we get the audit evidence from? Where do we get the audit evidence from? See, I'm not asking you by doing what you will get audit evidence. That is sorted. By performing audit procedures, we are going to get the audit evidence. But now I'm talking about from where we are going to get the audit evidence. See, majority of the audit evidence, whatever audit evidence that we get in the audit, majority of that audit evidence, actually we get it from accounting records. Actually, we get it from accounting records. Sir, what do you mean by accounting records? Nothing but our books of accounts. That could be journal entries, that could be ledgers, that could be the supporting documents, that could be the agreements, that could be the contracts. So whatever evidence which the auditor is going to get in the audit, one of the major source for getting all that evidence is accounting records or accounting information. Okay. But my question is, do you think accounting records is the only source from which auditor is going to get the audit evidence? The answer is no. It is agreed, majority of the information comes from the accounting records, but it is wrong to say auditor will get evidence only from accounting records. So auditor is going to get evidence from one more source, or source also, which we call it as other information. So majority of the audit evidence comes from accounting records, but accounting records is not the only source from which auditor is going to get the evidence. There is some portion of evidence which is coming from other information also. Sir, what is that other information from which auditor can get audit evidence? That could be incorporation documents like MOA, AOA of the client's organization. From that also auditor can gather evidence. There could be external confirmation. From that also auditor can gather evidence. So like that, audit evidence broadly comes from two sources. Majority comes from accounting records, but apart from accounting records, auditor also can gather some evidence from other information also, like MOA, AOA, external confirmation. From all these sources also auditor can gather audit evidence. And one more thing, guys, when I say audit evidence, do you think audit evidence includes information only which supports the information in the books of accounts? For example, if there is a purchase entry written for 1 lakh in the books of accounts, when I check the invoice, in the invoice also there is 1 lakh rupees. In the invoice also there is 1 lakh rupees. Yes, this is evidence because it is supporting the information in the books of accounts. Assume that a purchase entry was written for 1 lakh. When I check the invoice, in the invoice the amount is only 10,000. Guys, if you pay attention, this is also evidence. This is evidence that information in the financial records is wrong. So when I say audit evidence just doesn't include the information which is supporting the books of accounts. It also includes the information which is contradicting with the books of accounts. If you got supporting information, it means it is giving you satisfaction that information in the books of accounts is correct. If you got if you get non-supporting information, that is also evidence that information in the books of accounts is wrong. And in some extreme circumstances, not getting responses, not getting evidences, is not getting proper information is also a kind of implied evidence. So when I say audit evidence, it just doesn't include only the information which supports the information in the books of accounts. It includes the information which contradicts with the books of accounts. In some cases, not getting information is also a kind of implied audit evidence. Now let us talk about various types of audit evidences. See, on the basis of form or nature, evidence can be divided into 3 categories. One is oral evidence, other one is documentary evidence, and the other one is visual evidence. So on the basis of form or nature, evidence can be divided into how many categories? 3 categories: oral evidence, documentary evidence, visual evidence. See, you can understand the meaning from the names used itself. Oral evidence, the evidence which you are getting by way of words spoken. You ask the question, getting the oral responses, oral evidence. Documentary evidence, something which is there in the written format, either in paper form or electronic form. Visual evidence, you are looking at something and getting the evidence. For example, you look at the fixed asset and get the evidence. That is a visual evidence. So like this, on the basis of form or nature, evidence can be divided into 3 categories. Next, on the basis of source, evidence can be divided into 2 categories. Number 1 is internal evidence and the other one is external evidence. Very, very important. From this, you might get a question. So on the basis of source, evidence is further divided into 2 categories. One is internal evidence, other one is external evidence. Sir, what is internal evidence? The evidence which is originated, which is generated within the client's organization, that we are going to call it as internal evidence. Whereas the evidence which is generated outside of the client's organization, that we call it as external evidence. Very simple definition. Internal, if something is getting generated within the client's organization, if the generating point of the evidence is within the client's organization, that we call it as internal evidence. If something is getting generated outside of the client's organization, that we call it as external evidence. Now I will ask you one question. Purchase invoice, internal or external? Purchase invoice is an external evidence, not internal. Why? Because if you go and buy the item, for example, you are conducting audit of some client. If that client has purchased item, he will get purchase invoice. Where that purchase invoice is generated? In the supplier's premises, not in your client's premises. So purchase invoice is an external evidence. Why? Because it is generated outside of the organization. Sale invoice, internal evidence. External confirmation from the debtor, external evidence. Bank statement, external evidence. Then other vouchers are internal evidence. So like that, on the basis of source, we can divide the evidences into 2 categories. Clear, everybody? Able to understand? So we have divided evidence on the basis of form and nature. We have also divided the evidence on the basis of source. See, whenever the term audit evidence is used in the subject audit, it is always preceded by 2 terms. One is sufficient and the other one is appropriate. So if you would have paid attention, these terms we have already used. When we revised the chapter audit reporting, in order to explain different kinds of opinions, always I was telling whether auditor has obtained sufficient and appropriate audit evidence. So not just at that place, throughout the subject of the audit, when at various instances, whenever the term audit evidence is getting used, it is always preceded by two terms. They always will say the auditor should obtain sufficient and appropriate audit evidence. Now let us try to understand what is the meaning of sufficiency, what is the meaning of appropriateness. Sufficiency is a measure of quantity of audit evidence. Let me write it, you will get confused. So sufficiency is a measure of quantity, volume, number. Do I want 100 evidences, 200 evidences, 300 evidences? That measure of quantity, that measure of number or volume, we call it as quantity, sufficiency. Whereas appropriateness is a measure of quality of evidence. Appropriateness is a measure of how much qualitative the evidence is. So sufficiency is a measure of quantity, appropriateness is a measure of quality. But the standards always will say the auditor shall obtain sufficient and appropriate audit evidence. Sir, what quantity amounts to sufficient? What quality amounts to appropriate? We know sufficiency means quantity, but how much quantity can be called as sufficient? What quality can be called as appropriate? There is no hard and fast rule there. It all depends on the facts and circumstances of each and every case. If I put it in simple terms, the auditor should use his professional judgment. The auditor should use his knowledge, experience and training, and depending on client to client, audit to audit, he has to decide in this particular scenario how much quantity will be sufficient, what quality will be appropriate. This has to be decided by the auditor himself using his professional judgment. There is no hard and fast rule anywhere stated. But however, in taking that decision, what quantity amounts to sufficient, what quality amounts to appropriate, auditor will consider some factors. Auditor will consider some factors. So for determining sufficiency also, auditor will consider some factors. For determining appropriateness also, auditor will consider some factors. Sir, what are the factors which auditor will consider in determining what quantity of evidence will be sufficient? Number one, he will look at the size of the organization. See, if the size of the organization is very big, he requires more quantity of audit evidence. If the size of the organization is small, he will require less quantity of audit evidence. He will also consider risk of material misstatement. If the risk of material misstatement is very high, he will ask for more quantity. If the risk of material misstatement is low, he will ask for less quantity. It also depends on effectiveness of internal controls. If the internal controls are very effective, he will verify less transactions, less quantity of audit evidence will be sufficient. If he determines internal controls are not effective, more substantive audit procedures, he will perform more quantity of audit evidence he is looking for. It also depends on a few other factors like materiality. If he finds that certain item is very much material, certain item is very material, some item is very significant, for that item he will try to obtain more quantity of audit evidence. If he finds certain item as immaterial, not that significant enough, for that item he will try to obtain less quantity of audit evidence. And he will also consider something called characteristics of population. He will also consider something called characteristics of population. See, if the population is homogeneous population. Sir, what is homogeneous population? If the items in the population contain similar transactions, there the quantity of audit evidence required will be less. On the other hand, if the population is a heterogeneous population, if the population is going to contain dissimilar characteristics of transactions, there he will try to ask for more quantity of audit evidence. If I give you a simple example, assume I have placed before you two files. So in both the files, purchase invoices are there. In file A, there are total 1000 invoices. In file B also, there are total 1000 invoices. But in file A, all the 1000 invoices are made from a single supplier. From single supplier, all the 1000 invoices are there. In file B also 1000 purchases invoices are there, but those 1000 invoices are made from 3 different suppliers, Mr. X, Mr. Y, Mr. Z. So here file A is a homogeneous population. Why? Because it contains similar transactions. File B is a heterogeneous population. Why? Because it is having dissimilar characteristics. If I ask you practically, in which file you will try to verify more number of invoices? In file B. Why? Because it is having different characteristics. You want to cover all the different characteristics. So even auditor will also consider characteristics of the population. So like this, auditor is going to consider various factors. Then he is going to determine which factor will give how much quantity will be sufficient. That will be decided after consideration of all these factors. Now, how the auditor will determine appropriateness, sir? Appropriateness means quality. How much quality will be appropriate, that auditor will be deciding on 2 factors. One is reliability and the other one is relevance. The auditor will consider 2 factors in determining the appropriateness of the audit evidence. One is reliability. Sir, what is reliability? Trustability. Relevance. Relevance means what? Relatability. How much that evidence is related to the given item of the financial statement. And this reliability further depends on source and nature. Reliability further depends on source and nature. Like between internal versus external, which one is more reliable? External is more reliable. So external is more qualitative. So between oral, documentary, visual, which one is more qualitative? Which one is more reliable? Documentary. So documentary will be more appropriate. So the auditor is going to determine appropriateness on the basis of two factors. One is reliability, one is relevance. Reliability further depends on two factors. One is source and the other one is nature. Clear everybody till here? Comfortable? Now. So now we will talk about one more concept called what are the various audit methods or techniques. What are the various audit methods or techniques to obtain audit evidence? See, take for example, I told risk assessment procedure. In the risk assessment procedure, what we will try to do? We will try to obtain an understanding of entity, environment and its internal control to identify risk of material misstatement. But how you will understand about this entity, environment and its internal control? You need to follow some techniques, no? So what techniques are available? Similarly, in the compliance procedures, we try to obtain audit evidence whether internal controls are working effectively or not. But you need to follow some techniques to know whether internal controls are really working effectively or not. Similarly, substantive audit procedures, we try to verify whether the financial information is correct or not. To know whether financial information is correct or not, we need to follow some techniques. So, or we need to follow some methods. So, what are the various methods or techniques available for performing audit procedures? What different methods or techniques are available to achieve the outcome of audit procedures? See, any audit procedure you take, there are broadly 7 methods or techniques. There are how many methods or techniques? There are only 7 methods or techniques which are available, which auditor will choose any of them to achieve the outcome of the audit procedures, that is to achieve the audit evidence. Okay, so what are that 7 methods or techniques which are available for the auditor to achieve the outcome of the audit procedures? So if you see here, so those 7 methods are going to be, number 1 is inspection, number 2 is inquiry, number 3 observation, number 4 external confirmation, number 5 recalculation, number 6 reperformance, and number 7 is going to be analytical procedures. So these are the 7 different methods or techniques which are available for the auditor to perform audit procedures. So what are the 7 methods, guys? Very, very important discussion we are going to have. Once again, very repeatedly tested question from this particular chapter. So what are the 7 methods? List them out once. Inspection, inquiry, observation, recalculation, reperformance, analytical procedures. I think I missed out one more thing. Yeah, external confirmation. So let us try to understand what actually happens in each of this method. So first we will try to understand inspection. Sir, what is the meaning of inspection? Inspection means examining the records or documents. Simply, if I have to put it in other way around, test of details. For example, if you want to know purchase is correct or not, what you will do? You will check the supporting document. What will be that purchase invoice? If you want to know rent paid by your client company is correct or not, how you will verify? By checking something called rental agreement. If you want to know insurance premium paid is correct or not, by checking the supporting document, which is insurance policy. So checking of the supporting documents, that we call it as inspection. Or it also involves physical examination of an asset. To know whether asset is really existing or not, if you go and physically examine that asset, that also fall under inspection only. For example, you want to know whether inventory is there or not. So you are going and doing the physical verification. That is also inspection. So inspection involves 2 things. It involves either documentary examination. It also involves a physical examination of an asset. So then what is inquiry? Inquiry means seeking information from the knowledgeable persons. Nothing but inquiry means you are asking the questions and getting the responses. Whoever you feel knowledgeable in the organization, you go to them, ask the questions and get the information. That seeking of information from the knowledgeable persons, that we call it as inquiry. And that inquiry can be informal oral inquiry, or it could be a formal written inquiry also. Like for example, if you want to ask the questions, you can do it in a more formal way. Whatever questions you need answers, you can write it in a piece of paper, give it to the client, ask them to give the responses also in a written format. That is a formal written inquiry. Or even you can do the inquiry in way of informal oral inquiries also. No paper, nothing. Just you will go and informally ask the questions and get the information. So inquiries can range from formal written inquiries to informal oral inquiries. See, in the inquiries, the most integral part is not asking the question. Whatever responses you have got, analyzing that responses and coming to the conclusion is the most integral part of the inquiry. So evaluation of the responses is the most integral part. And by doing inquiry, you can get 3 kinds of information. By doing inquiry, you can get, by doing any inquiry, you can get 3 kinds of information. Number 1, new information which you are not at all aware of, or information which supports the information which you already know. or information which is contradicting with the information which you know. So by doing any inquiry, only these three kinds of information you will get. Altogether new information, or information which supports the information which you already know, or information which is contradicting with the information which you know. So by doing inquiry, you will get any of these three responses, any of these three kinds of information. But the problem with the inquiry is, inquiry will give you the least persuasive evidence. It will not give you, it will be giving you less convincing evidence than compared with any other method. Inquiry may not be, the evidence which you are obtaining from inquiry may not be persuasive. It will be least convincing evidence, least satisfactory evidence. You will get it by following a method called inquiry. Then the third one is observation. Sir, what is observation? The name itself says, if you are trying to get the evidence by looking at a process being performed by others. If you are trying to get the evidence by looking at a process being performed by others, that I am going to call it as observation. For example, I am sitting and observing the management's counting process. Management is doing inventory counting. I am sitting and observing. That is what I am getting the evidence by way of observation. I want to know whether control is working effectively or not. I am sitting there observing whether internal control is getting performed properly or not. This is also observation. Do you think evidence, whatever you are going to get from observation, is it reliable? It is reliable, but the problem is that evidence will be reliable only till the point of time that observation is taking place. That means if you are observing, someone will do the activity very sincerely. What is the guarantee when you are not observing, the same person will do the same activity in the same manner? What is the guarantee? So that is the main problem with the observance. For that point of time, evidence will be reliable, but there is no guarantee the same activity will happen in the same way without your observance. Clear? So that is the problem with observation. Now, another method to obtain audit evidence is external confirmation. Sir, what is external confirmation? Getting a direct written response from a third party. For example, in your client's books of accounts, there is a debtor, Mr. A, and the client has shown that that debtor is required to pay to your client company 1 crore rupee. You want to know whether that is correct or not. What you can do? Directly send an email or send a letter to that debtor. Sir, I am the auditor of the company. I came to know that my client is, you are required to pay some amount to my client. Please confirm what is the amount you are required to pay. And if you get the response from that third party, that we simply call it as external confirmation. So external confirmation is a direct written response to the auditor from a third party. Guys, oral response will not be considered as external confirmation. As per the standards on auditing, only written responses will have a validity. Written response only will fall under external confirmation definition. More we will discuss later when we take up the standard SA 505. Next one, recalculation. Recalculation means nothing but checking of arithmetical accuracy, whether additions, deletions, profit calculation, assets totaling, all that calculations are done properly or not. Checking that, we call it as recalculation. But these things are outdated. Why? Because today all the basic math will be done by the software itself. So that's why recalculation is still no longer relevant today. And reperformance. Sir, what is reperformance? It is auditor's independent execution of a process which is already performed by the entity. Like for example, entities management or entities employees have already done some process, but you are doing it once again to know whether it is correct or not. That we call it as reperformance. If I give you a simple example, the management staff has already prepared the BRS, but you are telling, I also know how to prepare the BRS. You prepare the BRS once again on your own, then compared with the management's BRS. So you have independently executed a process which is already done by entity. This we call it as reperformance. And finally, we have next one called analytical procedures. As I have already told you, in the analytical procedures, we will not do something called checking of the supporting documents and all. We will try to study the relationship between financial and non-financial information. And on the basis of that, we are going to evaluate whether the financial information is correct or not. So that we are going to call it as analytical procedure, where we simply try to study the relationship and evaluate whether the financial information is correct or not. So for achieving the objective of any audit procedure, these are the only 7 techniques which are available. So what are the 7 techniques? Inspection, inquiry, observation, external confirmation, recalculation, reperformance, and finally analytical procedures. So these are the 7 methods relating to audit evidence. Understood everybody? Clear and comfortable? So now we will try to discuss the next important concept from this chapter relating to audit evidence, which is relating to the term called assertion. So now we are going to discuss a small concept relating to assertion and what are the various different kinds of assertions are there. See, this term is very, very important from the examination perspective. They might ask a true or false statement or MCQ relating to this concept of assertion. So please listen carefully. So this term, we often come across this subject audit. The term assertion is used at various instances throughout the course of the audit. So now we will try to revise quickly what is this concept of assertion. See, assertion means simply the representation. Assertion means simply a representation made by management regarding the items of the financial statements. So what is the simple meaning of the term assertion? Assertion means simply a representation, conveyance of information, whatever representations which the management is making regarding the items of the financial statements, those representations which are made by the management regarding items of financial statements, that I'm going to simply call it as assertion. And when I say representations made by the management, those representations may be explicit representations, or they might be implied representations also. So when you take the financial statements of any entity, if you look at the items of the financial statements, there are so many representations which the management is making. Some representations they are making explicitly, some representations they are making implicitly. So let me give you one simple example to make you understand this concept of assertion in a detailed manner. Take for example, you have taken a balance sheet of some company. In the balance sheet of the company, you are able to find something called fixed assets amounting to 100 crores in the balance sheet. In the balance sheet of the company, you are able to find the financial statement. In the financial statements, you are able to find that there are fixed assets which are shown as 100 crores were on the face of the balance sheet. See, who will prepare financial statements? Management. Now, the management, just by showing this fixed assets as 100 crores, they are trying to convey a lot of information, which they may not write explicitly anywhere, but just by showing this fixed assets as 100 crores on the face of the balance sheet, they're trying to make a lot of implied representations. What are they? See, by showing fixed assets as 100 crores, management is trying to convey that fixed assets worth 100 crores are in existence with the company as on the balance sheet date. They will not write it anywhere, but just by showing fixed assets as 100 crores, they are impliedly trying to convey that the fixed assets worth 100 crores are existing with the company as on balance sheet date. That we are going to call it as existence assertion. And by showing the fixed assets as 100 crores, management is trying to convey that they have completely recorded all the fixed assets. They did not miss out anything from the books of accounts. Then the total value came to 100 crores. That we call it as completeness assertion. And by showing this fixed assets as 100 crore rupees, they are impliedly trying to convey that they are the owners of that assets. We also call it as rights. So management is trying to convey that they have ownership rights against that assets. That's why only they have shown as fixed assets in their balance sheet. And also by showing that fixed assets as 100 crore rupees, they are even trying to convey that they have valued all the fixed assets properly. Then the correct value came to 100 crore rupees. Able to understand what I'm trying to say? So by simply showing fixed assets as 100 crore rupees, management is trying to make all these representations. Guys, see here, all these representations are not explicitly done. All these are implied. So these representations, these conveyance of information which is done by the management regarding the items of the financial statements, that we call it as assertion. So when I say assert, for this assert, the assertions are existence, completeness, ownership, valuation. Similarly, if you take balance sheet, for example, in the liability side, there is a long-term borrowing. They have shown 50 crore rupees. Now the management, by showing this long-term borrowings as 50 crore rupees, here also they are trying to make a lot of representations. They are trying to convey that long-term borrowings worth 50 crore rupees are existing with the company as on the balance sheet date. They have recorded completely all the long-term borrowings. They did not ignore anything from the books of accounts. They have an obligation. In case of assets, we say rights, but in case of borrowings, the company is trying to convey they are having an obligation to pay 50 crore rupees. And they are also trying to convey that they have valued all their long-term borrowings properly. Then the correct value came to 50 crore rupees. So just by showing this long-term borrowings as 50 crores in their balance sheet, all these representations are implicitly made by the management. All this we call it as assertions. These are all assertions regarding liabilities. Similarly, if you take any P&L item, for example, I will take now P&L item. Now in the P&L item, for example, in the statement of P&L, there is a revenue. In the revenue, 1000 crores was shown. Now by showing this revenue as 1000 crore rupees, there are various assertions here also management is trying to make. So by showing revenue as 1000 crore rupees, they are trying to convey that revenue transactions worth 100 crores have occurred, have taken place during the financial year. And they're also trying to convey that they have completely recorded all the revenue transactions. They did not miss out anything from the books of accounts. And also they're trying to convey that these are relating to current year. Whatever transactions are there, whatever revenue of 1000 crores is there, which has been recorded, which has taken place in the current year. None of the future years revenue has been recorded in the current year. None of the past years revenue has been recorded in the current year. That assertion we give a name called cutoff. And also they are trying to convey you that they have measured this revenue properly. Nothing but they have calculated this revenue properly. Then the correct value came to, then the correct amount came to 1000 crore rupees. And I can keep on adding. They are also trying to say that classification. They have classified this revenue in a proper manner. So like this, regarding the items of the P&L, these are all the various assertions which are made by the management. So like this, whatever assertions which the management is making regarding the various items of the financial statements, that we call it as assertion. And if you pay close attention carefully here, as an auditor, when I say I'm trying to verify the financial statements, I will try to obtain audit evidence regarding these assertions only. For example, if I'm telling I want to verify the fixed assets and I want to verify the fixed assets and I want to obtain audit evidence regarding which matters, you will try to obtain audit evidence. You will try to obtain audit evidence whether really fixed assets are in existence or not, whether really fixed assets are all completely recorded or not. Company is the owner of that fixed assets. Company has valued the fixed assets properly or not. So whatever representations which are made by the management regarding those assertions only, auditor will try to obtain the audit evidence. Same thing with revenue also. For example, if I have to verify the revenue, what things I will try to verify regarding revenue? I will try to verify whether revenue has really occurred during the year, whether the company has completely recorded all the revenue related transactions, whether revenue belongs to current year only or not, whether the revenue has been measured properly or not, whether the P&L items have been classified properly or not. So if I put it in other way around, whatever assertions which are made by the management regarding that only, auditor will always try to obtain audit evidence. So you'll be able to find the definition here. So see the definition here. Assertion refers to representations made by management. Who will make the representations? Management. Very important for true or false statements. They might ask you a question that a true or false statement they will say assertions refer to representations made by auditor blah blah blah. So that is actually wrong. Assertions are always representations made by management. They could be either explicit, those assertions might be expressly stated, or otherwise. That means assertions could be implicit also. They might not be stated anywhere, they are implied. Like the way I have told you examples now, all of that are implied assertions. They are not expressly stated, they are all implied, that are embodied in the financial statements, that are incorporated in the financial statements. That means whatever representations which the management is making, which are included, which are embodied in the financial statements, and the same things are used by the auditor to consider different types of potential misstatements. Nothing but whatever representations which the management is making, regarding that only auditor will try to obtain audit evidence whether misstatements are there or not. So this is the definition of the term assertion, which you all guys have to remember. And in case if they ask you to write the examples of the assertions, these are the examples whatever we have included here. These are the examples which you are supposed to write in your examination. Clear, everybody? Able to understand? So this is what relating to assertion. Understood? So with this, majority of the concepts relating to audit evidence we are done with. Essay 500, major discussion, most important discussion from the examination perspective, we are all done with. Now we will try to understand the concepts relating to audit documentation. As I have told, this chapter, audit documentation and audit evidence, it is actually a combination of two different concepts. One is audit documentation, one is audit evidence. Audit evidence related part of discussion we are done with. Now we are going to start our discussion regarding audit documentation and whatever content we are supposed to discuss in the audit documentation that has actually been taken from SA 230. First of all, let us try to understand what is the meaning of audit documentation. What is the meaning of the term audit documentation? The term audit documentation has been defined as it is a record. It is a storage of audit procedures performed by the auditor, audit evidence which the auditor has gathered, and whatever conclusions which the auditor has reached. That recorded information regarding the audit, we are going to call it as audit documentation. Very important definition. So if they ask you what is the meaning of the term audit documentation, what you are going to write? So audit documentation is nothing but it is a record of, it is a storage of whatever audit procedures you have performed, whatever audit evidence you have gathered, on the basis of that audit evidence, whatever conclusions you have generated. So nothing but if I put it in simple terms, whatever you have done in the audit, what procedures you have performed, by performing that procedures, what evidences you have gathered, on the basis of that evidences, what conclusions you have reached, everything we have to store it, that recorded information only, we call it as audit documentation. So audit documentation is very, very important from the perspective of the audit. Why? Because if tomorrow something goes wrong in your audit, and if someone makes an allegation against you, so and so person has not done the audit effectively, then you have to go and prove in the court of law that as an auditor you have done the audit sincerely. So the burden of proof will be on the auditor. If tomorrow any allegation comes against the auditor that auditor did not do the work properly, so auditor himself has to go and prove before the court that he has done the work properly without his mistake. Sir, how he will prove? If he go and swear, sir, mommy promised, daddy promised, I did the work sincerely, please spare me, no one is going to listen. So at that point of time, when you have to prove before the regulatory authorities that you have done the work sincerely, there is no mistake from your side, the only thing which will come to your rescue is audit documentation. what will only come to your rescue? Audit documentation. So that is what the main purpose of audit documentation. And there are other names for audit documentation. We also call it as working papers or work papers. Also, we are going to call, sometimes we also call it as audit file. And audit documentation is the most important thing which every auditor must concentrate, because if tomorrow something goes wrong, the only thing which will come to your rescue is what? Audit documentation. If I put it in simple terms, from the beginning till the ending, whatever you have done in the audit, everything should form part of audit documentation. Like what is your audit team, what is your audit plan, how many engagement team members are there, which person has carried out which work, what procedures you have performed in each area, by performing that procedures, what evidences you have gathered, supporting documents you have verified, the agreements you have seen, and on the basis of that evidence, how you have formed a conclusion, on what basis you have decided which kind of opinion will be appropriate, like what is the impact of the misstatement, how you have decided whether the misstatement is material or material and pervasive, what audit report you have given. So like this, from the beginning till the ending, whatever we have done in the audit, everything should be stored in the audit. So that we call it as audit documentation. Sir, what is the main purpose of the audit documentation? So as I've already told you, the main purpose of the audit documentation is it will act as a proof that you have performed the work as per the standards on audit. So like as you could see, audit documentation provides the evidence of auditor's basis for conclusion. If tomorrow someone is coming and asking you, boss, you have given so and so opinion on that company's financial statements, on what basis you have given that opinion? I should have something in my favor to prove that. No. So what will act as a evidence? Audit documentation is going to act as a evidence that there is a basis for the conclusion, and on what basis you have given the conclusion, that will be provided by audit documentation. And also, audit documentation provides evidence that audit was planned and performed in accordance with the standards on audit. If tomorrow someone is coming and asking you, you have done the audit, did you do the audit as per your wishes, or did you do the audit as per the standards on audit? I need some information to prove my point. No. So at that point of time, if tomorrow someone is coming and asking you whether you have complied with the standards on audit or not, I can show to them my audit documentation. Sir, see the documentation, in this clearly it was there, I have complied with all the standards on audit. So the main objective of audit documentation is it will act as a evidence for the basis of the auditor's opinion. It will also act as a evidence for evidence that audit was planned and performed in accordance with standards. So that is the main objective. But apart from that main objective, there are various other purposes also which documentation is going to fulfill. So the main objective is it will act as evidence. But apart from that main objective, it will also serve various other purposes. So what are the other purposes, or what are the other advantages of audit documentation? Number one, if you have an audit documentation, it will assist the engagement team. It will benefit the engagement team. It will act as a guidance for the engagement team to plan and perform the audit. And it will assist the members of the engagement team to direct and supervise the audit work and to discharge their review responsibilities. That means if you have a proper documentation in place, you can betterly direct, you can give proper instructions to your engagement team members, even you can supervise them properly. And enabling engagement team to be accountable for its work. By maintaining audit documentation, you can make your engagement team members responsible for that work. Why? Because if tomorrow something goes wrong, I can easily find out that work was assigned to him. I can easily call that person and fix the responsibility on him. So if you have audit documentation in place, it will make the engagement team members accountable, responsible for their work. And retaining records of matters of continuous significance for future audits. Nothing but if you maintain the audit documentation of the current year, that will help you even to perform the audit of the subsequent years. And also, by having audit documentation, you can conduct internal control quality reviews and inspections. If you want to review whether your engagement team members are doing work properly or not, if you have audit documentation, you can review. If there is no concept of audit documentation, there is no chance of reviewing the work. Not just internal reviews, if at all any external inspection has to happen, like for example, like a peer review has to happen. So even for external inspection to happen, if audit documentation is there, external inspection will happen. If audit documentation is not there, external inspection is not going to happen at all. So apart from the main objective, audit documentation will also serve all these purposes. Sir, what should be the contents of audit documentation? As I have told, from the beginning till the ending, whatever you have done in the audit, everything should form part of documentation. That could be your audit programs or plans. That could be whatever analysis you are doing. That could be issues, memorandum, nothing but whatever questions you are asking, whatever responses you are getting. And along with that, summaries of significant matters, what communications and representations you have got, checklist, correspondence, communication about the significant matters, who performed the audit work, when that work was completed, who reviewed the work, when that review was done. So like that, from the beginning till the ending, whatever we do in the audit, everything should form part of my audit documentation. Then coming to the next question, what are the factors which affect the form, timing and extent of audit documentation? See, three questions they are asking. How you are going to decide the form in the sense format for maintaining audit documentation. What is the timing, at what time you have to obtain the audit documentation, and how much extent, how much volume of audit documentation you are going to maintain. So first I will talk about format. What should be the format of audit documentation? Guys, in the standards on auditing, there is no prescribed format which has been mentioned. The standard did not say in this specific format you have to maintain audit documentation. Like that, standard did not give you any specific format for audit documentation. Instead, what simply SA 230 has told is, you maintain the documentation in such a manner that some other experienced auditor, having no previous connection with this audit, he should be able to understand how you have planned and performed the audit by going through the audit documentation. Which means, if I put it in simple terms, what they're trying to say is, for example, you are an auditor. You conducted the audit of X Limited company. Now, the standard simply says that you should maintain documentation in such a manner that some other experienced auditor, some other experienced chartered accountant, even though he is not associated with this audit in any manner, he should be able to understand how you have done the audit, what procedures you have followed, what evidences you have gathered, what conclusions you have reached. He should be able to understand by just going through your audit documentation in such a manner you are supposed to maintain the audit documentation. That's all. They did not mention any format, just to maintain the documentation in such a manner some other experienced auditor having no previous connection with this audit should be able to understand what you have done and what conclusions you have reached just by going through your documentation in such a manner you have to maintain the documentation. There is no specific format they have given. Now coming to timing of audit documentation. Sir, when you have to gather the audit documentation, the standard says you have to gather audit documentation as and when the audit progresses. So you should not be like, first I will complete the entire audit, then I will gather documentation. No, that will not be reliable. So the documentation which you will gather as and when you perform the audit procedures will be more reliable than the documentation which you will get after the completion of the entire audit. So you should not postpone the collection of the audit documentation. As and when you are performing the audit procedures, simultaneously you have to gather audit documentation. Don't postpone it to a later point of time. Why? Because its reliability will get reduced. Then extent of documentation. Sir, how much amount of audit documentation I have to maintain? How much volume of audit documentation I have to maintain? How much quantity of audit documentation I have to maintain? That depends on various factors. So how much extent, how much volume, how much content of audit documentation you have to maintain, that depends on various factors, and those factors are size and complexity of the entity. If your client size is very big, if your client is engaged in very complex transactions, then you might require large volume of audit documentation. If the client is small in size, if the client's operations are very simple, not at all complex, then you will have less quantity of audit documentation. It depends on the nature of audit procedures you are performing. What kind of audit procedures you are performing, on that also the extent of documentation will rely. And also identified risk of material misstatement. If you find risk is very higher, you will perform more audit procedures. You will have more evidence, and that evidence will go and sit in audit documentation. That means audit documentation is going to get bulky when the risk of material misstatement is very high. And also significance of the audit evidence you have obtained. If you find certain evidence as very significant, that you will include it. If you find an evidence as not that significant, you will not include it. So how much volume of documentation you are going to maintain, that depends on significance of the evidences, also importance of the evidences also. It also depends on nature and extent of exceptions. For the time being now, exceptions you understand it as deviations, whatever you have found out, misstatements you have found out. If you are finding more misstatements, regarding that you want more documentation. If you found less misstatements, regarding that you want less documentation. And it also depends on what audit methodology you are using and what tools you are using for conducting the audit. So these are the various factors which auditor has to keep in mind while considering the extent of the audit documentation. Clear and comfortable, everybody? Now, so coming to the next question, which is write about assembly of audit file, its ownership and retention. Very important. Most of the time the question comes from this chapter regarding this audit file only. See, I have told you audit documentation. What is the meaning of audit documentation? I have told. The audit documentation also will be sometimes referred to as audit file. Audit documentation, audit file, both are actually very interchangeable terms. But there is a slight difference. When we look from the conceptual perspective, there's a slight difference between audit documentation and audit file. So what is that difference between audit documentation and audit file? Let me try to explain it in a practical way. For example, assume that ABC & Co, an audit firm, has got the audit of the client X Limited. Now for conducting this audit, some 10 engagement team members have gone and did the audit. Now in these 10 engagement team members, every person will do a portion of work. So the work will be divided among all the engagement team members. Each person will be doing certain kind of work. For example, this person has performed work relating to purchases. Now this person will have audit documentation relating to purchases. For this person, sales work has been assigned. This person will have audit documentation relating to the area of sales. For this person, incomes was allocated. Now this person will have audit documentation relating to incomes. For another person, fixed assets was allocated. This person will have audit documentation relating to fixed assets. So every person will have certain portion of documentation relating to whatever work we have done. So this we call it as generally audit documentation. Nothing but what procedures you have performed, what evidences you have gathered, that you will store. So this we generally call it as audit documentation. See, every person will have a portion of audit documentation. But don't you think once the audit gets completed, all the engagement team members should sit together, gather all their audit documentation, and they need to arrange it in a proper order, and they have to create such a file that it will be useful for the future. So that organized audit documentation, that properly arranged audit documentation, we call it as audit file. That's all. See, in the audit documentation, audit file, same content will be there. But audit documentation is in its very raw format, unorganized content. Now, generally what will happen is once the audit gets completed, all the engagement team members sit together, they will gather all their, they will compile all the documentation gathered by different engagement team members. They will arrange in one proper order. If they find any duplicate documents, they will delete it. They will store in proper file format. They will organize it in a proper way so that it becomes useful in the future. So that organized, that properly arranged documentation, I am going to call it as audit file. That's it. So in both, content is going to remain the same, but in case of documentation, it is a very much unorganized or a raw format of the documentation, whereas audit file is an organized, audit file is an arranged, properly fixed documentation, that we call it as audit file. Able to understand? And this audit file, sir, is there any time limit within which this assembly process should get completed? See, generally, this arrangement of raw format of documentation into audit file, that we call it as assembly of audit file. See, whatever this raw documentation is there, compiling all that, creating one final file which is ready. So that process we call it as assembly of final audit file. Do you think should there be any time limit within which this assembly of the audit file should get completed? Yes. Why? Because if the standards did not give you any time limit, what will happen is the auditors will become very lazy. They will never arrange that final audit file. So that's why the standard has put some time limit. There is a maximum time within which this assembly of final audit file should get completed. Sir, what is that time limit? They say within 60 days. Within 60 days from the date of auditor's report, or within 60 days from the completion of the audit, this assembly of audit file should get completed. This arrangement of the entire audit documentation into proper file, arranging in proper sequence, deleting the duplicate documents. So this process should get completed within 60 days from the date of auditor's report. So now you tell me, during this assembly of the final audit file, during the process of assembling of this final audit file, does it involve performing any new audit procedures? No. During the assembly process, we don't perform any new audit procedures. Will we form any new conclusions during the assembly of the final audit file? No. So during that assembly of final audit file, we will not perform any new audit procedures. We will not perform any new conclusions. We will just do some administrative work like giving the page numbers, deleting the duplicate documents. Only this kind of administrative work we will do during that assembly process. We don't perform any new audit procedures. We don't take any new conclusions. Clear and comfortable, everybody? So within 60 days, you are supposed to complete, and during that 60 days, no new work will be done. Only administrative work will be done. Okay, sir, once audit file is ready, I have engagement team sat together, created one final audit file. What should be done with that final audit file? Should you go and throw it away? No, you should not throw away that audit file. What you should do, sir, that audit file should be retained. What should be done? That audit file should be retained. How long that audit file has to be retained? So they say audit file has to be retained for a period of 7 years from the date of the auditor's report or the group's audit report, whichever is later. So simply you remember, for 7 years from the date of the completion of audit, this audit file has to be kept in a proper custody. For 7 years, you have to keep it safe. And one more thing, sir, this audit file is whose property? Who is the owner of that audit file? See, when I say audit file, whose information is there? Client's information is there. Who gathered it? Auditor gathered it. Now this audit file, whatever is there, that is whose property? That is under the ownership of whom? Is it the property of auditor or is it the property of the client? The standard says audit documentation is always the property of the auditor. Documentation is always the property of auditor. Why? Because though it might contain the information relating to the client, but that information has been gathered by the auditor. That information has been gathered by performing the efforts of the auditor. So that's why audit documentation is always under the ownership of the auditor. Sir, if the management is requesting the auditor to share the copies of the audit documentation, is he under an obligation to do it? No, there is no obligation on the auditor to share the copies of audit documentation with the management. There is no compulsion. If he wants, he can share. If he doesn't want, he will not share. No one can compel him. So unless there is a legal or regulatory requirement, auditor is under no obligation to share the audit documentation. It is completely at his discretion. It is completely at his own choice. If he wants, he will share. If he doesn't want, he will not share. Now I have one more question to ask you. Guys, I explained you the concept of branch audit. Do you remember? See, in the case of branch audit, the branch auditor will complete the branch audit and submit his branch audit report to the principal auditor. Now, can the principal auditor demand the working papers of the branch auditor? Or if I put the question in the other way around, is the branch auditor under an obligation to share the copies of audit documentation with the principal auditor? The answer is no. Even branch auditor is not under an obligation to share the copies of audit documentation with the principal auditor. Here also the branch auditor is at his own choice. It is at his own discretion. If the branch auditor wants, he will share the copies with the principal auditor. If the branch auditor doesn't want to do it, he will not do it. Even principal auditor can't compel the branch auditor to share the copies of audit documentation with him. Clear, everybody? So this is what regarding audit file, its ownership and also its retention. Everybody able to understand till here? Clear and comfortable? So since we understood about assembly of the audit file, its retention and ownership, let us proceed further and understand few more questions from this chapter, audit documentation. So we will have one small concept called audit notebook. What is audit notebook and also state its contents. See, very simple concept, guys, and also important from the examination perspective. See, whenever you go for the audit as a member of the engagement team, you are required to carry one notebook. So in that notebook, a variety of matters will be required to be recorded. But mainly in the audit notebook, see the notebook which generally engagement team members carry, that we call it as audit notebook. Now, what is the purpose of the audit notebook? What things will be recorded in the notebook? See, in the audit notebook, two things will be recorded. Number one, the status of the work done by an engagement team member each day. For example, if you are an engagement team member, you are conducting audit of some entity. Today, you have started doing the audit. Today, you have verified the purchases. So by the end of the day in your audit notebook, you have to record the status of the work. So like that, every engagement team member who is associated with the audit engagement, he will be given one notebook, and in that audit notebook, you are supposed to write the status of the work done each and every day. And not just that, during the course of the audit, you will get across various queries. You will have various doubts. So if you don't record the doubts anywhere, what would happen is, as we humans have the natural tendency to forget, whatever doubts which we got during the course of the audit, if we don't make a note of that, we also tend to forget our doubts. So if you forget your doubts, you will not be able to get the replies from the staff, of the client's staff, and then ultimately your audit effectiveness will be lost. So that's why whatever doubts you have got during the course of the audit, as and when you have got the doubt, you have to immediately record in that notebook whatever has been given to you. So that is what the main purpose of this audit notebook. So it is mainly used for recording two things. Number one, status of the work done each and every day, and also whatever queries, whatever questions you have come across during the course of the audit, that you need to record, along with that status of disposal. That is, first you will record a list of all the doubts whatever you have got, then you will record your response also. Is it resolved or is it not yet resolved? If it is resolved, what response you have got as a part of resolution? If it is not yet resolved, you will not forget it till the last moment of the audit. You will keep on following up with the client for getting the responses. So that is what the main purpose of the audit notebook. Sir, why status of the work has to be recorded? See, we understood queries. Why it is important to note down the doubts? That is very much clear. Why? Because to improve the overall audit effectiveness. Now, why it is required to note down the status of the work also? Why? Because sometimes what will happen is, an engagement team member is required to be replaced. For example, we are conducting audit of some client X Limited. There used to be one article assistant, Mr. A. He came for 2 days of audit. After that, he becomes sick and his work has to be taken up by another engagement team member. See, assume that this work has to be taken by another engagement team member, Mr. B. See, if Mr. B doesn't know where exactly did the person Mr. A stopped his work, what will happen to Mr. B? Once again, he has to start the work from the beginning. On the other hand, if Mr. B knows where exactly Mr. A stopped doing the work, he can take up the work, he can resume the work exactly from the same point. So it will unnecessarily avoid doing the work twice. So sometimes concerned article assistants might be away from the work, or sometimes audit will be stopped temporarily. For example, an engagement team has started doing audit of the client X Limited. They did the audit for 5 days. Because of some reason, they have given the gap of 10 days. After that, they want to resume. So if they don't know where exactly they have stopped the work previously, once again here also what will happen, you have to commence the audit once again from the beginning, which will be a double work. So in order to avoid that, here in these circumstances, whenever the concerned assistant is away from the work, or when the work has been stopped temporarily, so if you want to resume the work once again, you need that link of work. You need to know where exactly the work has been stopped previously. So that link of work will be provided by the audit notebook. Clear, everybody? So that is what the purpose here. As you could see, very important question from the examination perspective, guys. Audit notebooks helps in tracking the links of the work when the concerned assistants are away from the work, and also it is used for recording various queries that you have come across during the course of audit, and also what is their status. Are they disposed or not yet disposed? In case if the queries are already disposed, that means if the queries are resolved, you need to record what explanation you have got. In case if some queries are unresolved, then you need to do the follow-up. So that is what going to be the main purpose of the audit notebook. So then we have one more small concept called audit completion memorandum or audit documentation summary. Sir, what is this audit completion memorandum or what is this audit documentation summary? I will try to explain it in simple way. See, generally, when you perform audit of big entities, the audit documentation is going to become very bulky. See, I have practically been associated with audit of some clients where for one single client, the audit documentation will run for 800, 900 or even sometimes 1000 pages. So I have been a part of certain audits where we have prepared the audit documentation, which is running for 800 to 1000 pages of audit documentation. We will have for a single client. So generally in big audits, in large clients, the volume of the audit documentation will be very bulky. But out of all this bulky documentation, everything might not be as useful repeatedly. See, there will be a lot of bulky documentation, but out of that bulky documentation, we will not use each and every document again and again. For example, as I've told, one of the main purpose of the audit documentation is we can use that documentation for the future years also, no? So, but in case of this big audits where the audit documentation is very bulky, not every document is going to be important. So what auditors generally will do is in these kind of big audits where audit documentation is very bulky, they will take out the significant matters from this audit documentation and prepare a separate summary, which we generally call it as audit completion memorandum or audit documentation summary. So this will be done only for big clients where audit documentation is very bulky. All the documentation might not be equally important. So what generally auditors will do is in big audits, out of that bulky documentation, they will choose certain information, whatever they feel it as significant, and that significant information from the audit documentation they will pick out and prepare one summary. That summarized documentation only we are going to call it as audit completion memorandum or audit documentation summary. So if you could see here, the auditor may consider it helpful to prepare and retain as a part of the documentation a summary that describes what significant matters you have identified, how they were addressed. Nothing but out of your entire bulky documentation, we are going to identify the significant matters and how we have addressed them. So that summary of the audit documentation, we are going to keep it separate. And where it will be generally maintained, it is particularly maintained for large and complex audits. When you have done audit of very large entities, very complex entities, there you generally try to maintain that audit documentation summary. Further, the preparation of summary will assist the auditor in consideration of significant matters, and also it will help the auditor whether objective of all the standards have been complied. If you maintain the documentation summary, it will help you to give you confidence that whether you have complied with all the objectives or not. See, I'm telling, see, one of the most important thing which you have to include as a part of your audit documentation, if you see here, see one of the contents of the audit documentation, if you see here, where is it? Yeah, correspondence regarding the significant matters. See, we have seen that in the audit documentation, even you have to include significant matters. At various instances also, you will see that auditor has to pay more attention to significant matters. Auditor has to include in the documentation significant matters. But what are significant matters? What are significant matters? In audit, various matters will be there, but out of that, what are significant matters? How to decide which matter is a significant matter, which matter is not a significant matter? So I will say it simply, the standard did not give you any hard and fast tool to know, okay, these matters will always be significant matters, these matters will not be significant matters. There is no such kind of guidance given in any standard. Sir, then who will decide what is a significant matter, what is not a significant matter? Auditor himself has to decide. Sir, how he will decide? Using his professional judgment, he will decide. Using his knowledge, experience, and training, he is going to decide out of all the matters, which matters are significant matters that will be decided by the auditor himself on the basis of professional judgment. However, in this particular question, they have given a few examples of the significant matters. Once again, I'm telling you, these are just examples. This is not a full and final list. This is not a conclusive list. So by the end of the day, which matter is a significant matter, which matter is not a significant matter, that has to be decided by the auditor using his professional judgment. But here, for the sake of our convenience, they have given a few illustrative examples of significant matters. So if you see here, significant matters arising during the course of audit are required to be included in audit documentation. But judging whether a matter is a significant matter or not, it requires objective analysis of facts and circumstances. That means auditor will analyze the facts and circumstances of each and every case. Accordingly, he will decide, accordingly, he will judge whether a matter is significant matter or not. However, they have given us a few examples of the significant matters, which are if you have performed audit procedures and the results of the audit procedures indicate that the financial statements could be materially misstated. That means if you performed audit procedures and that audit procedures has given you indication that there is a chance of financial statements getting misstated, don't you think that is a significant matter? Yes. Or you performed audit procedures which indicate that there is a need to revise the auditor's previous assessment of risk of material misstatement. See, initially when you perform risk assessment procedures, you identified certain risk. But after a certain point of time, when you performed audit procedures, your procedures indicated that whatever risk that you have already defined, that you need to reassess it. That means there is a chance of more risk of material misstatement. So if you performed audit procedures and those audit procedures gave a hint that whatever risk that you have already identified that needs to be revised, that could also be a significant matter. And once again, circumstances that cause the auditor significant difficulty in applying necessary audit procedure. If you find any circumstances which is giving you difficulty in performing audit procedures, you are facing difficulty because of some circumstances to perform the audit procedures and get the audit evidence, even those circumstances also could be significant matters. Or you have some findings that could result in a modification of the auditor's opinion, or you have certain findings which are required to be highlighted in the emphasis of matter paragraph, that also could be considered as significant matter. So once again, I'm telling you guys, this is not a full and final list of significant matter. These are just illustrative examples which have been given. But finally, whether a matter is significant matter or not a significant matter, that has to be decided by the auditor himself using his professional judgment. Clear? So next we have one more simple question, the concept of true and fair view. Guys, as we all know, the entire concept of audit is turning around this concept called true and fair view. Why? Because as an auditor, we are ultimately required to express an opinion whether financial statements give a true and fair view or the financial statements does not give a true and fair view. So this we have been seeing from the introduction to the auditing chapter itself. But what exactly is a true and fair view? How to decide whether the financial statements are giving a true and fair view? Can we exhaustively define true and fair view? The answer is no. So we can't exactly define, we can't give a list of 10 points and say if these 10 points are satisfied, financial statements give true and fair view. If any of the point is violated, financial statements do not give true and fair view. These kind of exhaustive definition, we can't give it for true and fair view. Why? Because it is a subjective decision. So what is a true and fair view? What is not true and fair view? We can't exhaustively define it. It all depends on facts and circumstances of each and every case. Clear, everybody? So that's what even the same thing they say there. So the concept of true and fair view is very fundamental concept. Why? Because our opinion is revolving around that concept only. Whether financial statements give a true and fair view or not, our entire opinion is revolving around the true and fair view. So that's why it is a very fundamental concept in audit. And what constitutes a true and fair view is a matter of auditor's judgment. We can't exhaustively define what is true and fair view. It all depends on auditor's professional judgment. Auditor himself has to use his knowledge, experience, and training. He has to analyze the facts and circumstances of each and every case, and then he has to determine accordingly whether financial statements give true and fair view or not. However, if I specifically insist you, if I catch you and ask you, no, at least give me a few illustrative points which you will check whether financial to determine whether financial statements give true and fair view or not. So if I insist you, if I'm calling you and if I'm insisting you, so don't give me exhaustive points, but at least you give me a few illustrative points, a few illustrative examples of the points which you will check to determine whether financial statements give true and fair view or not. Then what you will say? At least a few illustrative points. So I have to check that neither assets are overvalued or undervalued. That means they have to be stated at correct amount. No asset should have been omitted. If there is any charge on the asset, it should have been disclosed. Material liability should not be omitted. P&L and balance sheet should disclose all the matters which are required to be disclosed. Accounting policy should have been applied consistently, and unusual, exceptional, non-recurring items should have been disclosed separately. So these are some illustrative examples which we will check to determine whether financial statements give a true and fair view or not. Clear, everybody? So once again, these are also not full and final list. These are just what? Illustrative examples. A few illustrative examples which we will check to determine whether financial statements give true and fair view. So then we have one more concept called audit trail, which is actually newly added. This question was newly added in the new scheme syllabus. It was not there under old scheme. So let us try to understand what is this concept of audit trail. Practically, we'll try to understand with the help of some examples. See, what is this concept of audit trail? If you have knowledge of the Companies Act provisions, Companies Act 2013 has made it mandatory that from the financial year 2022-23, the companies are required to use such an accounting software which will have a feature of recording audit trail facility. Companies Act 2013 has made it mandatory that the companies going forward, now they have to use such an accounting software which will have a feature of recording audit trail. Sir, what is this audit trail? We'll talk about it, but just let us try to understand what are the requirements of Companies Act. So the Companies Act 2013 has told from the financial year 2022-23, the client has to use, every company should use such an accounting software which has the feature of recording audit trail facility. And if you remember the reporting requirements under 143 subsection 3 clause J, in that also last point, sixth point, they have even put a responsibility on the auditor to comment whether the client company is using such an accounting software which is having the feature of recording audit trail, and that audit trail should not have been tampered with, and that audit trail has been retained or not. Even as an auditor, we are required to comment. So Companies Act first put an obligation on the company to use only such accounting softwares which will have the feature of recording audit trail. Then they have even put an obligation on the auditor to check whether really the client company is using the accounting software which is having the feature of recording audit trail, and that we need to check and give a comment. So the Companies Act has first put a responsibility on the company. Then they have even put an obligation on the auditor to check whether the company is fulfilling that requirement. So, okay, now we have seen what are the requirements, what is the obligation of the company, what is the obligation of the auditor regarding audit trail, we have understood. Now let us try to understand what exactly is the meaning of audit trail. What exactly is the meaning of audit trail? Guys, as we all know, today the clients or today the companies are maintaining their books of accounts, not in the manual manner. They are trying to maintain the books of accounts in the accounting software. So today every kind of entity, even if you take small sole proprietors, even today the technology has been advanced so much that even small traders also, they can maintain their books of accounts in a software like a mobile app. So that much that much technology has grown. So today even the companies also, they are maintaining their books of accounts not in manual manner. Manual books of accounts have gone. Manual books of accounts is a history. Now each and every company is trying to maintain the books of accounts in the accounting software, and we have so many accounting softwares like we have Tally, we have SAP, we have Oracle, so we have Finacle in case of banks and all. So like this in the market we have so many accounting softwares which are available. Now the Companies Act is telling that the client should use such an accounting software which will have a feature of recording audit trail. So going forward, or now from already most of the companies have adopted it. So if you are using accounting software, that accounting software, in addition to recording the entries, it should have one more feature called it should record an audit trail facility. Sir, what is this audit trail facility? Take for example, if in the software I have to pass an entry. For example, I am using Tally software. In the Tally, a purchase entry has taken place. For example, I will make a entry in the Tally. Purchase account debit 1 lakh rupees to so and so person, to so and so supplier, Mr. X account 1 lakh rupees. So an accountant will write an entry. Even he will give the narration also. An accountant will write this entry in the Tally software. Now this entry will go and sit in the books of accounts. It will be recorded in the books of accounts. A journal entry will be there in the books of accounts of the software. From there, it will go to trial balance. From there, it will go to balance sheet and all. Now, in addition to recording of this entry in addition to recording of this entry in the books of accounts, the software should also record the history of this entry. The software should also record the background of this entry. For example, the software, the tally will record this entry. In addition to that, the tally should also record who passed this entry, who passed the entry, and at what time it has been passed. For example, the tally will record this entry in the journal. Along with that, it will also record in the background, this entry was recorded by so and so person, Mr. A, who is an accountant. This entry was recorded on somewhere around 31st of January 2023. This entry was recorded, and this entry was recorded at 9 a.m. So like this, a history, the flow of transaction is also required to be recorded. So not just the entry, guys, even the background of the entry, who passed it, at what time it was passed, at what date it was passed. So all these things, this background, this history of the transaction is also required to be recorded. This history of the transaction, we are going to call it as audit trail. Okay, so let us extend this example. For example, assume that the client is having such an accounting software where entry will be passed by accountant. Same entry we will take. So purchase account debit 1 lakh to Mr. X account 1 lakh. This entry was first recorded. Now the company is having a policy that first accountant will record this entry. Then it will be approved by the manager. Then only entry will be reflected in the books of accounts. So company is following some strict control in the software. So accountant will pass an entry, manager will approve, then only entry will go to books of accounts. So when accountant has passed an entry, assume manager has also approved, then this entry will go and sit in the accounting software in the books of accounts. But in the audit trail facility, what will be recorded is the history of this entry. Take for example, so and so date, 31st of March 2023, morning 9 a.m. Mr. A, who is an accountant, he passed an entry. So the software will record entry has been recorded. Okay. On the same day, 31st of January 2023, morning 11 a.m., Mr. B, who is a manager, he approved it. Entry was approved. Okay. Now, after certain period of time, after 5 days, the accountant has realized that he made a wrong entry. Wrong entry. The amount should have been credited to Mr. Y. The supplier is actually Mr. Y, but by mistake he has recorded as Mr. X. So what he has done is on 5th of February, he made this change. He changed that accounting entry. Now in the audit trail, even that also will be recorded. So on 5th of February 2023, so somewhere around afternoon 2 p.m., accountant, once again the same person, Mr. A, accountant, what he has done, entry amended. What he is writing, entry amended, and what changes were made, that also should be recorded. Earlier it was credited to Mr. X, now it was credited to Mr. Y. So what change has been made, that amendment of the entry also will be recorded. Now assume that after few more days, the management thought this entry is irrelevant and the accountant deleted this entry. What accountant did? He deleted this entry. On 10th of February, entry was deleted. Now this entry is not there in the books of accounts. But in the background, it should be recorded that on 10th of February 2023, somewhere around evening 4 p.m., so and so person, Mr. A, accountant, what he has done? He has deleted the entry. Guys, if you pay attention here, entry is not there in the books of accounts, but history of the entry will always be there. Entry is not there. What is there? History of the entry should be recorded. So this we call it as audit trail facility. So nothing but the flow of a transaction, how a source document has been converted into entry in the books of accounts. So you will have a purchase invoice, how that purchase invoice has converted into an entry in the books of accounts. In that process, who and all are involved, at what activities have been taken place, at what time they have taken place, this history of the transaction should be recorded. That only we call it as audit trail facility. Able to understand? And the Companies Act 2013 has made it mandatory that the companies going forward, they have to use only such accounting software which will have the feature of recording this audit trail facility. If the client is using accounting software which is not having this feature of recording audit trail, they are doing the violation of the Companies Act. And even as an auditor, we are supposed to verify the client's accounting software and check that whether they are using this audit, whether they are using only such accounting softwares which will have a feature of recording audit trail facility, and this audit trail facility should be preserved. Like the way the company is having an obligation to preserve their books of accounts, to retain their books of accounts, along with that, this audit trail facility also should be retained. Clear, everybody? So this is what simply the concept of audit trail. So with this background discussion, if you read this content, you will be able to understand. So what is audit trail? Audit trail is a documented flow of transaction. That means how the transaction is flowing. That documentation we will do, that documentation only we call it as audit trail. It is used to investigate how a source document was translated into accounting entry, and from there how it was inserted to the financial statements. Nothing but if you have done one transaction, how it is getting converted into entry, that entire history of the transaction, if we record that, only we call it as audit trail. So it is used as audit evidence to establish authenticity and integrity, to know whether a transaction is genuine or not, to know whether a transaction has been passed by the authorized person only or not. If you want to know it, then the audit trail is going to come to your rescue. Now, what are the advantages of audit trail? If this audit trail facility is there, what will be the advantages? See, they mainly talk about advantages to the management. Number one, audit trail will help in maintaining a record of system and user activity. Which user has done which activity, which user has done which transaction, that you can know if you have audit trail. It is a step-by-step record by which accounting, trade details or other financial data can be traced to their source. Using the audit trail, we can go back to the source from the entry, from where it has started, we can trace it to the source. It will enhance the internal controls. Even by maintaining this audit trail facility, it will improve the internal control and security in the organization. And you can also fix responsibility. If something goes wrong tomorrow, by referring to the audit trail, you can find out the exact person who committed the mistake. So it will help in fixing the responsibility. And audit trail analysis can also specify the problem, the reason of the problem. What is the root cause for the problem? That also you can find out if you have the audit trail facility. And it is also helpful in ensuring operation of system. Whatever systems the management has planned, whether they are working as expected or not, that also we can find out by audit trail. And it will help the entities in their regular system operations. So these are all the advantages by maintaining an audit trail. But implementation of audit trail involves some cost. If you have to implement implement this audit trail, you have to incur some extra cost. For example, if you want to buy a software today which will have a feature of recording audit trail facility, you will have to pay some extra cost. And the cost is not only in terms of money, even the cost is in terms of time also. See, just having audit trail facility will not be enough. Even the employees of the organization, the management of the organization should allocate some amount of time for analysis of the audit trail also. So if you have just implemented the audit trail facility and no one is doing the analysis, there will not be any use of it. So you should not, for implementing audit trail facility, the cost will be incurred. The cost is not just in terms of money, the cost is also in terms of the time which you have to spend in that analysis. And even today, auditors can make use of some audit softwares, audit tools they can use to analyze this audit trail. Not today, auditors are not just verifying books of accounts. Even the auditor can verify the audit trail to find out the frauds and errors also. But if you look at the audit trail data, that will be very bulky. See, having books of accounts only for big companies, the books of account itself will be very bulky. Now, if you add the background of that entry, audit trail is even much bulkier. So, but auditors need not worry today. Today, there are some accounting softwares which are available in the market, which auditors can use to analyze that audit trail and find out the chances of happening of frauds and errors. The same thing they try to say here. So the auditors can make use of automated tools to analyze large volume of data thrown by audit trails. And also systems which will have an audit trail inspires the confidence of auditors. If you came to know your client is using accounting software which is having audit trail, your confidence also will get increased. And also it will help the auditor in verifying whether controls were operating as expected. And it will also aid in verification of whether a transaction was indeed performed by a person authorized. Really the transaction was executed by the person who is having the power to do it or not. We want to know. How we can get to know? That is whether transaction has been passed by a genuine person or not. You want to know. How you can get to know? By verifying the audit trail, you can get to know. And it will also increase the reliability of audit evidence. So these are all the advantages of auditor because of audit trail. So most important question, guys, high chance of getting tested in the examination. Why? Because this is a question which has been newly added under the new scheme. This question was not there under old scheme. Clear, everybody? So this is what regarding audit trail. So guys, with this, the concept of the chapter of audit documentation and audit evidence from our material we have covered. Hope you guys have understood this concept in a detailed manner. This chapter is relatively very simple, very easy, but important from the examination perspective.